Smart finance. What comes to your mind when you talk about smart finance? The reason personal finance is very, very important to every class of people is because you don't want to live a life of debt, or you don't want to be enslaved forever, living in penury and not be able to manage your own finances. Let's look at how you can be financially smart. If you see generations that pass wealth from one generation to the other, it means that there's something about those generations that they know that you don't know. There are things they've learned along with the wealth passed from one generation to the other. Is also the finance education, and that is personal finance. How you can multiply wealth, how you can manage your wealth and be debt-free. You talk about middle class and low class. They live almost their life on credit, and they mount a whole lot of credit. Right now, averagely, you have an individual having ranking up about over $10,000 in credit card debts. Now, the question, how could you escape the debt trap and be financially free? Let's see some of the ways you can live debt-free and live, in financial freedom. Let's see, one of those ways is to what we call you optimize your cash. Wealthy people track their expenses, and that is what, most of middle class, or you say low class people, they spend all they earn just on anything, and most people will not be able to track what they spend on, and that is what the rich people don't do. You can hear someone say he has a personal accountant. Are you surprised? Yes, people have personal accountant. The reason why they have that is not because they just want to have someone to just pay, but because they know it is very important for them to have somebody who can keep track of their finances. Now, as a person, how can you be able to optimize cash? Is by tracking all your expenses, your daily expenses, your weekly expenses, your monthly expenses, to your yearly expenses. You account for every cent. I mean, every cent that is being spent. You can start by using simple software. You talk about Rocket Money. You talk about you need a budget. You talk about every dollar. So these are simple softwares that you can use to track every single penny. If you cannot use those softwares, do you know what you can use? You have your Google Sheet. You have your simple Excel that on Microsoft, right? So all of these can help you. What else can you use? You can do it like a journal, right? You went to the grocery. This is what I bought. This is what I bought. And you can be able to account for what you spend. By so doing, you'll be able to know how much you spend and be able to track your expenses on a daily basis. If you can account for every penny in and out of your account, then you're on your way to financial liberation. Yes, if you account for it, because accountability is one of the taxing activity for everyone. People see it as something that is very stressful. Nobody wants to be accountable. Once you are not accountable, then you cannot make money. You have to be accountable for every penny that comes to your account. Let's see. When you're able to account for those things, then you'll be able to save those cash. Another thing you can do, if you have little cash, don't say any amount is so little. How much do I want to save? No. You know what? Little penny that you drop in your piggy bank can actually rack up to tens of thousands of dollars. Yes, you heard me right. Tens of thousands of dollars over time by investing those little penny in high yield savings accounts. There are so many high yield savings accounts over there, pretty high yield savings accounts over there. Much you can just search for. Just go on your Google and look for high savings accounts around you, and you will see a lot of them. In fact, most of them are online. They are not traditional banking institutions, which means they are not mortar and bricks banking institutions. Online, you create your account online and they manage all that for you. You don't need to log into a computer before you can set up all this account. These IE savings accounts come with interest rates, some of them above 4%. Even now that the market is going down, you still have some of them that average 4%, 3.5, 3.8, 3.9, 4%. Another thing is that you might want to consider what we call treasury money markets. Most of these treasury money markets pay as high as 5%. Example is Vanguard Treasury Money Market Fund. So you want to see how you can use this as a way to make yourself money on those little savings you have. Don't allow your savings to just sit in your traditional account. It's not going to earn you anything. So you need to put them in interest yielding account for you. This account could be a great cash buffer in the future to take care of future needs. Another way you can be financially smart is by doing what we call pay down high interest bad debts. If you've got credit cards with high interest on it, you want to pay them down. In fact, debt is one of the ways people live in penury throughout their life. Those credit cards can be actually attractive. They help you spend. You spend what you don't have. Is that not interesting? When you spend what you don't have, that's a problem. What do you do next? Is to find a way to pay them down. And one of the ways you can pay them down, let's consider this scenario. If you know that your income is not up to par or higher than your expenses, then you need to reconsider how you spend your money. You want to actually live below your means and not live at par or above your means. You don't want to do that. That is not financially smart. To be financially smart is to either live below your means or you ensure that whatever you're spending on is necessary and your life can't do without them. You pay down all high interest rate debts that you have. How do you do that? Get this. If you have high interest rate debts and you have high yield interest savings, if your interest on your savings where you can put your money have a higher yield than your debt interest, then you can invest in your savings account with higher yield interest and you can take your time to pay down your debt. But ensure that you don't rack up more debts. But if your high yield interest savings account has a lower yield compared to your debt interest, you need to quickly divert those money into your what? Into your debt and make sure you pay down your debt. Because the more you hold your debt, the more interest it accumulates. And you don't want to have more debt. Okay? You want to be financially free is to pay down your debt. And how do you pay down your debt? There are two strategies. Two common strategies you can use to pay down your debt. One is what we call avalanche method. Exactly. So you approach by paying down high interest rate debt first, irrespective of what the balance amount is. For example, you have a debt that has like 10%, 20%. So you start from the top and say, okay, you pay down the debt with 20% interest rate. Then you move down to the one that's 10%, 5%, and pay them down respectively. Another way is what we call the snowball method. The snowball method is you don't consider what the interest rate is, but you consider what amount of balance. You pay down debt with the least balance and you gradually move up. Another way you can be financially smart is invest. And when we talk about investment, it's not until you have that big money to invest on. In fact, you can invest in what we call Roth IRA, even as an individual, whether you're working or even you are self-employed. Why we talk about Roth IRA is because it has a lot of advantages. You can save a whole lot. If you have Roth IRA, you can max it out. You have a maximum contribution of $7,000 into Roth IRA. By so doing, what that means that your investment grow tax-free. Another smart move for you to be financially free is to diversify your investment. For example, don't invest all your money in Tesla. Don't invest all your money in Walmart. Don't invest all your money in just particular stock. So you want to have well-diversified assets, right? Well-diversified industry. For example, you don't just invest all your money in consumer goods industry. You want to ensure that you have your investments in oil and gas, you have investments in consumer goods, you have investments in technology industry, transportation industry, and all of that. By that, you well diversify because look at it. If one industry is doing bad, the other industry will be able to compensate for the loss you have in one industry. Having your investment in different stocks, in different companies, in different industries, and different markets will help you to be financially free. If you want to be conservative and earn moderate rate of return on your investment, in the long term, you can consider investing in what we call indexed funds. Alternatively, you can consider what we call ETF market. That is exchange traded funds. You can invest in that. If you consider all of the strategy discussed, you not only beat recession, you will also grow your money and be financially independent. So these are the few ways you can be financially smart. In my next video, I will be talking about how you can take advantage of all avenues to be able to enrich yourself and be financially free. Until then, I sign out. Bye.